stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Rates and yields have gone up because we have better growth.
Rates and yields aren't going up because we have better growth. What are they, nuts? Hi, I'm Phil Grande at philsgang.com. You know, it just amazes me. These people talk about the economy, and they have no idea what's going on. I mean, to say that rates are going up because of growth. No, we're not getting good growth. All we got was a bunch of money supply that keeps forcing the stock market up because we're not getting the growth. So if you really think about if you go back to 1995, the beginning of the dot-com era, and you go to 2008, so there's two eras in there. There's the dot-com and the housing con. And when the banks blew up under G.W. Bush, after he got in office, 2009, 2010, that should have been, he should have said, you know what, I have a great opportunity now to make America great again. So in other words, when we had that dot-com crash, and then we entered in a housing crash, and right before Obama came in 2009, he should have said, I'm going to take these banks that caused this housing crash, and I'm going to let these banks go down. And I'm going to take all the assets of these banks, these five biggest banks, and I'm going to take them and spread them among the 5,000 good banks. And they were willing to take these assets because these were good banks and solid banks. The banks that screwed everything up were the big investment banks. And he had an opportunity at that time, perfect timing. He should have raised interest rates right after that housing crash. He should have raised rates. There would have been perfect time to do it. And he should have cleaned up the corruption, the financial corruption in these banks. I mean, these banks were committing crimes, for God's sakes. Packaging these subprime loans and then getting them marked up as AAA when they were triple F. I mean, the crime that was going on was unbelievable. So he had a perfect time, G.W. Bush had a perfect time to say, I'm going to clean these banks out, get rid of all these banks, and then I'm going to take all the assets, spreading them on the other 4,000 or 5,000 banks. I'm going to start raising rates. I'm going to fix this financial corruption. I'm going to raise rates, reduce debt. I'm going to balance the budget. I'm going to cut spending. My God, just think of the opportunity he had. But he didn't do that. No, instead he decided he was going to bail the banks out. Why? Well, because you got to understand the Bush dynasty, or their value or the net worth of the Bush empire is over $600 million at that time. I don't know what it's now. $600 million. So, and you got to understand where that wealth came from. It was oil and all the other things he was doing, but it was all financed by Wall Street. And you got to understand it was G.W.'s grandfather, Prescott Bush, who in 1924 started a Union Bank, which is an investment bank. So the Bush money is tied directly to Wall Street, tied directly to investment banking. So at that time, he had a great opportunity to make America great again, but instead he decided to take care of the family wealth, to take care of Wall Street. And we never recovered from that. And if you take a look at, if you go and just take a look at between 1995, let's go up to 1995 when the dot-com started, 1995. From 1995, go all the way through to 2008. So let's encompass both the dot-com and the housing con. Those are both cons. Remember what they did. They increased the money supply 133%. So when these guys blew up, instead of letting these banks go down, they turned around, printed money, $3 trillion to $7 trillion, took the money, went to the banks, and bailed them out. They said, here, we're going to take this money now. We're going to buy your treasuries. We're going to buy your mortgages. Now you got all this money, and you start lending. But wait a minute. Don't lend to Main Street. Do not lend to the folks that are upside down in their homes. Remember, everybody losing their homes? The houses were worth a lot less than they owed. And GW said, no, let's not. You tell these banks, he says to Bernanke, make sure they do not help Main Street, the small businesses, and they do not help the people who are upside down. Instead, what we need them to do, the banks, is go buy assets, go buy gold, and go buy all these other small banks that were going down, that were failing, and they go in and buy their deposits at pennies on the dollar. This is what they did. Then they turned around and they said, okay, we're going to now print even more money. And that's how, again, increasing the money supply. Every time you hear increased money supply, it simply means they print the money, they go to the banks, they buy their mortgages, they buy their treasuries, the bank's got a lot of money, and then they lend. But the problem is, remember how an economy grows. An economy grows when you lend money to business for business investment. When it's okay to print money. It's okay to increase the money supply. As long as when they go to the banks, and they say, here, I'm going to buy your treasuries, I'm going to buy your mortgage, now you got all this money, but I want you to use that money to increase productivity. Because when you increase productivity, you increase, the labor market gets strong. And when you have a strong labor market, what happens is in a strong labor market, the way it works, wages are going up much faster than prices. But that's not what they did. That's not what he did. So if you think about it, if you go and take a look at 1995 to 29 years later, 2024, you know what they did? They increased the money supply by 1,000%, but not a penny of that money went into business investment. Not a penny of that money went into production, into the labor market. It was only, know where that money went to? A lot of that money went to, again, remember what happened between November 2008 and and October 2012. That's when we had QE1, QE2, QE3, okay? And why do you have QE? Well, QE, when you have interest rates, after the stock market crashes, and the interest rates, the Fed rates are already low, you couldn't lower them anymore. So QE is a cute way of saying, we can't get interest rates down anymore, so let's go print the money, and we'll go take and we go buy again from these banks their mortgages, and they have cash, and they can go and start lending, but they don't lend to the public, they don't lend to businesses, they go buy gold and they buy other assets, and especially they go buy all the deposits from the other banks. And so those years there was $3 trillion between November 2008 and October 2012, $3 trillion that they put in QE1, QE2, the Operation Twist, and that was, in those years, remember, they were only going to do QE for 90 days. But it didn't go for 90 days. It went 2008 to 2012. That was destroying the economy. Because all they were doing is, again, none of that money was going into productivity. None of that money was strengthening the labor market. So that money was propping these bad banks up. And then that money, remember, they took the banks and loaned it to these public corporations that lost most of their money. And they said, why don't you buy your own stocks? Just buy your own stocks. Do stock buybacks. That way your sales don't have to increase. You don't have to increase your sales. And your stock price will go up without increasing your sales or increasing profits. So from 2008 to about 2020, if you take a look, the stock market went up from the day the market crashed in 2008. The stock market went up 80%, and the bank stocks went up 180% in a short period of time, but not because of earnings. And not because corporations were doing well, they're increasing productivity. And this is a huge scam. So if you take now from total of 1995 to 2024, during those 29 years, they increased the money supply 1,000%. 1,000%. You don't think we have a bubble? And by the way, there's a difference between a bubble, okay, and money supply. A bubble is when you have, for example, the dot-com bubble. A bubble is one thing. It's associated with one thing, like the dot-coms or the housing-com bubble. That's a bubble where you have greed, and people say, "I got to get in. I got to buy these dot-com. I got to buy these dot-com stocks. I can't be left out." It's greed and panic to buy. That's a bubble. The housing, how many people, again, they're buying homes, no down payments. People didn't have jobs. They're getting approved. They could pick their own payment. It was all greed and fear they weren't going to get into the deal. So the dot-com and the housing, those were bubbles. And the bubbles broke. 16 trillion was wiped out. Main Street got wiped out, 16 trillion, right? Those are bubbles. But what we're doing is far worse. When you start increasing the money supply from 1995 to 2024 by 29 years, that's far worse, because every time you print this money, give it to the banks, buy their treasuries and their mortgage-backed securities, remember what happens? The stock prices go up because of that, right? Stock prices go up artificially. And then what comes in behind that is inflation. So if you look between 1995 and 2024, over 29 years, we didn't have productivity. That's not what was going on. You had a handful of stocks. You had these magnificent 7 stocks. You had about 3 or 4 of these stocks that were carrying the whole market. And we had no productivity. There wasn't any productivity. This is worse than a bubble. It just doesn't stop. And so, again, if you go look just take from 1995 to 2008, that's 13 years. Over 13 years, the money supply went up 133%. Now, here's an interesting one. If you take from 2008, the crash, and go up to 2020, where that was the COVID crash, between 2008 and 2020, over that 11-year period, the money supply increased 114%. 114%. So if again, 1995, 2008, 13 years, money supply went from 3 trillion to 7 trillion, right? Or up 133%. 2008, 2020, the money supply went up 114% over 11 years. And then the bottom of March, after the market collapsed, March 2020, COVID, remember that? When it collapsed about 38%. And at the bottom, 2020, again, what they do? Same thing, increased money supply. So we have to pay for that at some point. You can't keep doing this. So now interest rates are no longer at 0. Interest rates from October 2022 to where we are today, the Fed rate is near 5%. So they got a real problem. So remember, an economy, solid economy grows when you have a strong labor market. And you get a strong labor market by, again, you want to go in and print money, and you want to go in and give it to the banks and give them cash by buying their treasuries and mortgages, that's fine. But that money needs to go into productivity and to producing. Because once you have good productivity, jobs increase, wages increase, consumption increases. We haven't been doing that. We haven't been doing that since 1995 for the past 29 years. This is just one big scam. That's all money supply increase. And most people don't have a clue. Now, again, I'd much rather have a bubble where you got these greedy people who they know nothing. They're just jumping in because everybody's jumping in, and they don't know what they're doing, and then the bubble pops. That's okay. I have no problem with that. Go in, bubble, go, pop, another bubble, pop. But this isn't a bubble. This is driving asset prices up insane, where now the prices of stocks are so overvalued, and everybody's walking around like, hey, we're in for a soft landing. Everything's wonderful. They have no idea what's coming because they don't understand how the economy works or the market, and they're not going to tell you how it works. But I am. Be right back after this break.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hi, I'm Phil Grande of philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And the Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
Comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now.
What a lie. That's not true at all. And by the way, remember when they lied to us about the 813,000 jobs? Remember, they always do the same thing. They lie about the number of jobs, and they come in, and then they lower it, right? They do it all the time. Well, guess what? They're now talking about taking June 2023 to June 2024, and they lied about 1 million jobs. That's right. We didn't get 1 million, but they said we did. Because remember, this was the race. This was the economy. This was remember, they were running for the White House. There's an election going on. So they lied about the 13,000 jobs. And then they turned around and then they lied about another 1 million jobs. And that hasn't come out yet, but it will. And that was all to show everyone that, hey, look at what we're doing. Look what this administration is doing. Look at the jobs we're creating. Because why? Because as I tell you, what makes a strong economy is the labor market. You got to pay attention to the labor market. If you have a strong labor market, then you have a strong economy because it's simple. When you take and give these banks money the way you should, print the money, buy their assets, Now they got cash, and that cash should go directly into productivity. First thing, buy machinery, equipment, new technology. They didn't do any of that. It's been one big lie. They haven't done that since 2008. No, they haven't done that. So we haven't had increased productivity. So what they do to create an illusion that we have a strong labor market, because they never put money into productivity, they always put money into stock buybacks, but not productivity. Look at the companies, how the stock's going from $35 to $235. And what they do? Did their earnings go up? No. A handful of companies have been carrying this whole market. Look at 2023, 2024. It's been 3 or 4 of the Magnificent Seven stocks carrying the whole market. And what really gets me is when Powell said this.
The comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now.
No, that was a total lie. There was panic. There's panic. Then listen to this.
So they feel like the labor market's in balance. People feel good about where the economy...
Well, if the people feel good about where the economy is, then why the hell did they elect Trump? You think they like Trump? They hate Trump. Few people like Trump. But why do you think 70% of the American folks went and elected him? Because they're scared. They're scared. They don't have any savings left. No, there's no savings left. Their 401ks, they've taken emergency withdrawals. They're scared. Remember, Biden has always lied to us about debt. Remember, we have too much debt. And he kept saying, debt has no relevance, as it puts no strain on the economy. What a lie that is. Let me repeat. He's come out and said many times, debt has no relevance. Can you imagine? Debt has no relevance, as it puts no strain on the economy. Are you kidding? Remember, the free marketplace gives us growth, but the government destroys the growth. Regulations destroy our growth. Matter of fact, government regulations is the single greatest barrier to prosperity, to production, to productivity. See, if we have a great labor market, we're going to do just fine. But the only way you can get a great labor market is to stop these senators, to stop these Congress from, again, this money supply. Stop printing this money, because with the money supply, the assets prices, stock prices go up. But that's it. And we pay for it. Stock prices go up, but our economy doesn't. Our economy doesn't get stronger. But they keep selling this. And here's what, the other day I'm listening to, these actors in Hollywood are stupid, stupid people. They have no idea how the economy works. They don't know the difference. They don't even know what money supply is. They don't know. They only can have a great economy if you take and put money into the banks by buying their treasuries and their mortgages, and they take that money and buy new equipment and loan it to companies so they buy new technology, new IT, new trucks, new buildings, so you can, instead of manufacturing 1,000 shoes in an hour, you can manufacture 10,000 shoes in 20 minutes. See, that's how a great economy works. See, that's how it works. But they decided after the 2008 crash, remember, the 5 biggest banks were broke. And they're still broke today, but people don't realize that. They're broke today. We have been propping these banks up since 2008. We keep on buying their damn treasuries. This is insane. And G.W. Bush had a great opportunity to fix. Why do you think they don't want Trump? Because Trump realizes this. He knows this. See, they want to keep this going on and on. Just keep doing the same thing. Keep printing more money and let the stock prices go up, and we don't care about the inflation because inflation helps Wall Street. That's right. They love inflation. You think they care about the guy on Main Street? Do you think they care about the guy who's making $50,000 a year and he got 3 kids and he's living paycheck to paycheck? No. If they did care, they would print the money, give it to the banks, and say to the banks, what you're going to do with this, you're going to make sure you loan it to companies who are going to put it towards new IT spending, increase their IT spending, increase their productivity by buying new machinery, new equipment, new factories, or don't you lend them the money? But what happened in 2008, 2012, those years, what they call QE1, QE2, the twist, and QE3. What did they do in those years? They just printed the money, gave it to the banks, and they did what? Give it to public companies to buy their own shares. And all of a sudden the stock market's going up and up and up and up. And people go, wow, isn't this great? Look at the market's going up and up. Wall Street's making a fortune. But the folks didn't. And they're in serious trouble right now. They're in serious trouble. I mean, the people have no savings. For God's sakes, they don't have any savings. And if you look at the folks, think about what happened. They did instead of putting money into productivity, remember, they told the banks between 2008 and 2012, don't you dare take any of that money and lend it to homeowners that are upside down in their homes. Don't you dare take any of that money and help at the small business on Main Street. Don't you dare. You take that money and give it to corporations who lost a bunch of money. We got to get their stock prices up. And we'll artificially put those stock prices up by giving them money free, and they buy their own shares. Yeah, that's how it worked. So how long can this go on? And then on top of that, we had the American Rescue Plan, the Inflation Reduction Act, and the Omnibus Bill. All spending. So what's the bottom line? Main Street got screwed. Think about net savings. As a percent of gross national income, we're below a record 0. Think about savings as a percent of our disposable income. It's below a record 5%. So our net savings as a percent of our gross national income is below 0, and our savings as a percent of our disposable income is below a record 5%. And 401k emergency withdrawals are at a record level. Consumer debt between their credit card, auto loans, student loans. Look, credit cards, 1.2 trillion, auto loans, 1.6 trillion. I mean, student loans, 1.5 trillion, credit cards, 1.12 trillion, and auto loans at 1.6 trillion. Bankruptcies in 2023 surged 18%. 2024 increased again by another 16%. The last 2 years, why we're being lied to by Harris that how great the amount of full-time jobs they're creating. A bold-faced lie. For the past 2 years under Biden and Harris, full-time jobs were flat. What was exploding was part-time jobs. Part-time, waitress, bartenders, low-paying jobs. That's what was exploding. Part-time jobs at an all-time high because people can't make it with one job. And then he comes out and tells everybody, hey, look at it.
So they feel like the labor market's in balance. People feel good about where the economy is. Demand.
That gets me. People feel good about where the economy is. Then why the hell did they elect Trump? So what do? We make money on this. Because when as this market's been going up, we stay long. We keep buying. We know these stock prices are overvalued, but we're not buying the stock for their value. We're not taking these stocks and hold on for 10 years. We don't buy these stocks to hold. As long as the money is going into these stocks and these stocks keep going up, we'll keep buying them, especially in the sweet spot, what we call the sweet spot. And again, look at this here. Just take a look at the money supply. Here you go. Look at this. This is insane. Here's what was funny. Between May 2022 in October 2023, they said, you know what? I think we've gone too far with this. Yeah, I think between 1995 and 2024, over 29 years, we increased the money supply 1,000%, but we aren't increasing productivity. I think we made a mistake. What we got to do is pull that money back out. So they started to pull out between March 22 and March 2023, and said, no, that's not going to work. And they started putting money back in. So the idea is, it doesn't matter to us if the stock market's going down or the stock market's going up. What the hell do we care? We don't care, because we make money in both directions, and you should too. All you got to know is how to sell a stock short. And that is not hard. And when you buy a stock, here, I'll put it up here for you. Here's one of our stocks. Look, this is one of our best stocks, IBM. Buy it in the sweet spot. Now, why is the sweet spot so important? Nobody talks about it. Because one, on my charts, it will turn green. Your chart is the candlesticks are red one day, green next day, red. Because remember, the candlesticks on your chart identify if the stock closed at a high that day or a low that day. I don't give a damn if it closed at a high or low. I want to know if money's going in. So between the sweet spot and IBM, we made 9%. I don't care what the high of the day was or the low of the day. I'm not a day trader. And here's another thing they screw you with. If you take, this is interesting. Remember how they tell you to cost average down, cost average down, cost average down? Why do they tell you to cost average down? Because they don't make much money on commissions when you short. So they tell you to cost average down. So you keep getting yourself in a worse and a worse and a worse position. Think about it. How stupid that is. You bought a stock at 240 and then you buy it again when it's at 120? What are you, nuts? Now remember, when they sell short, they got to buy that stock back to take their profit. And that's where the sweet spot ends up. And because when they buy their stock back that they've been shorting, there's a rush of money, tremendous amount of buying going into this section that is so small. So you have this tremendous amount of buying going in this short period of time. So there is no way that stock's going to go down. Here, look, a 9% gain in the sweet spot. And you still have another what? You still have another 20% left to go. But if all you did was buy the stocks in the sweet spot by using my color-coded chart where you buy on green, you sell on red, it works. So I don't know when this market's going to crash, but it will because of what I just explained. You can't increase the money supply over 1,000% between 1995 and 2024. You can't increase the money supply 633% between 2008 2024. You can't increase the money supply between $3 trillion and $7 trillion. That's 133% over 13 years, or 114% over 11 years, or 38% over 4 years. It doesn't work. It works for the banks, bails them out, but it screws you. Join my gang, Phil's gang, free for 10 days. Hey, have a great Thanksgiving. See you on the chart.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.